Welcome to our Key Strategies for Retirement Planning seminar. And we're very grateful for the hosting of this by the Northeastern Connecticut Chamber of Commerce, and particularly Betty Kujai. Conversation with and sharing it with Liesl Cording from our team at Weiss, Hale & Zahansky Strategic Wealth Advisors here today on August 31st. And we want to welcome our audience of fellow business owners and participants. And our intention is to share some key strategies for retirement planning, even in these times where a pandemic might be amongst us. We still need to be thinking about how we might retire someday. So thanks for joining us today. If you go to the next slide, we'll start with talking a bit about our backgrounds. For myself, I'm a principal and managing partner at Weiss, Hale & Zahansky Strategic Wealth Advisors. I'm also the chief goals strategist. And I spend much of my time in the firm, both managing the firm and providing firm leadership to the organization, but also equally spending time with our clients and our lifeblood, which is why we do our work. Prior to joining this firm, I spent time 17 years in the pharmaceutical industry, most recently as vice president and general manager of the U.S. respiratory division for Sanofi Pharmaceuticals. There I led a $600 million organization, had about an organization of 300 people, and was responsible for all functions of the organization, including finance, sales, marketing, and analytics. And so since I've transitioned to this role and have become a principal and managing partner of this firm, I've really enjoyed working with clients, particularly as they transition into retirement, but have helped them. And that's just really the reason why we do what we do, which is to help people transition and achieve their life goals.
Good afternoon, everyone. I'm Liesl Cording, and I'm a certified financial planner. I'm a vice president and associate financial advisor at Weiss, Hale & Zahansky. I joined Weiss, Hale & Zahansky in January of 2019. And before that, I started my career in the wealth management industry back in the financial crisis of 2008. And I split my time at two different institutions, U.S. Trust and People's United Wealth Management. And at both of those institutions, I was responsible for working with ultra high net worth clients that had assets under management of between $3 million and $1 billion. And so during my time working in the financial industry, I've really realized how important it is to be financially responsible. And that's why I'm here today to share our knowledge on how to plan for retirement. And also today, you'll be getting some key insights into our strategic financial planning process that will help you to build a plan, invest well, and ultimately live well. So I'm excited to be here today and joining you and presenting on this very important topic of retirement. And so Jim, on the next slide, will walk through the agenda.
Yeah, thanks, Liesl, and it's great to have you as part of this session today. We've already gone through our backgrounds, but for those of you listening here today, we want to really start with going through what are the financial life stages that we all kind of go through, and what should we be thinking about during those times, ultimately leading to some transition like a retirement. And these days, retirement could be a bad word in the sense that many folks are choosing to not necessarily fully retire from their roles, but maybe do something that they're passionate about when they step away from the job they're doing, and that's really about finding that passion after spending so much time fully working and providing for families and businesses throughout our life. So we'll spend some time talking about that. And then, as Liesl mentioned, the Plan Well, Invest Well, Live Well process is our financial planning process that guides clients through these financial life stages and ultimately to retirement and beyond. And all of that is about achieving your goals as clients of ours, or as those listening today. So we hope that you'll get some key takeaways. That's where we'll end today. And we're confident that the content we put together will really be helpful, and we hope you take a few pearls away from today. Next slide, please.
So as you're looking at this stage, financial life stages, at this slide, financial life stages, place yourself in any of these categories. And while you're envisioning yourself in these categories, what is it that you're challenged with? If you're in your 30s, maybe you're starting a family and you're balancing that with saving for retirement. Or maybe you're in your 50s and you're paying for a child's education and balancing that with retirement. And so as we look at each of these stages, they're all leading up to one common goal that each of us share, which is retirement. Even though we love our jobs as much as we do, there will be a day where we will not be working and we'll be relying on our assets and our other income sources to help to create a successful retirement. And retirement will look different for each one of us. So on the next slide, I'd like to take a moment and pause. And for each one of you on this call, let's envision your retirement. Who are you with? What are you doing? Where are you? And when did you retire? And so for me, if I were to share that, I'm retiring in my 60s. I'm living in a small energy efficient home, most likely in the northeast corner of Connecticut. And I better be playing a lot of golf. I hopefully am traveling the world. And if I'm able, still coaching soccer. And so for each of you, what does your retirement look like? Okay, so back to reality. Now we have to plan for that retirement. And so let's use our plan well, invest well, live well, strategic financial planning process to help you achieve your desired retirement. And so when you think about that retirement that you just envisioned, do you know how much income you'll need? Or do you think you're saving enough now? Or what if you have a business, for some of the business owners on this call? And so I'm sure these are some of the questions that you're thinking about as you're going through and envisioning your retirement. So let's take the guesswork out of that and let's take a look at our strategic financial planning process so that we can make sure that you achieve that retirement that you so desire and that you've been working hard for your entire life. So on the next slide, I'll walk you through our strategic financial planning process. It's a 3-step process. So the first step is plan well, which I'll walk us all through today. Our second step is invest well, and Jim will cover that in a couple of minutes. And then ultimately, if we do steps 1 and 2, you will conquer step 3, which is live well, and you'll be living that retirement that you just envisioned on the last slide. So in the plan well phase, this is where we discover your goals and we'll understand that type of retirement that you just envisioned, what we need to do in order to reach that retirement goal. And in the invest well phase, this is where we match both your risk profile as well as your time horizon for investing. And we tie that and build a diversified portfolio that ties directly back to your financial plan so that you can achieve your goals and ultimately live well. So on the next slide, I'm going to dive into the plan well step, which involves, so this is you over here on the right, client in orange. And so on this slide, this is where we're looking at key components of discovering your goals. So of course, some of you may have some short-term goals. For example, if you're in your 30s, again, you're probably saving for a child's education, or you're starting a family, or maybe you're looking to buy that dream house. Longer term goals would be something like retirement. But this is really where we understand that retirement that you desire and those goals that you really are looking to achieve. And then from there, that's the foundation. We build out and understand what assets you have to support those goals. And do you have any debts that would hinder any part of your retirement? Also understanding your retirement income and expenses. And Then, of course, there's always the estate planning that is a tough conversation to have, but a necessary one. We want to make sure that you're carrying out your legacy. So for some clients, um, making sure that money goes to who it's supposed to, carrying out their wishes. And so those are all important parts. But there is one inherent, especially with all the small businesses that we have in our northeast corner of Connecticut, we have that unique part that we need to plan for a business succession planning. And so that's one part of the financial plan that's a little more complex. And so there is more conversations around who it will go to, what sort of income you'll receive. So I'll dive into that on the next slide in a little more detail. So determining what your exit path will be for your business. And this is both applicable to business owners and those that are retiring in general. You all have to determine what your exit path will be, either whether it's out of a larger company or whether you're a business owner. So your goals will really drive that strategy. And there's a number of things to consider, and that's why it's such a complex topic that we spend a lot of time on. You've worked your entire life to build that legacy, which is your small business, and we've got to make sure that you're getting the full value that you deserve and that you've honestly spent your entire life building up. So once we've determined what that value is, then we've got to understand, okay, how will you derive value from it in retirement? Are you going to be looking for income in retirement? So let's say that next business succession owner is paying you some income for a number of years after you retire. Or are you getting a lump sum for your business? So that'll be a lump sum that would be invested and tied to your financial plan and strategy. So these are some of the factors that we consider. One of the hardest conversations to have as well is, will it be going to a family member? And if so, what's the value? Will it be a discounted value? Or are you going to be giving it to that next generation? And the reason I say that is because that will have a huge implication to your plan and whether or not it'll be successful. Because if you think about it, your business is likely your largest asset. And that's why we have to have such a detailed conversation around what the succession plan will look like, so we make sure that you're achieving your goals and living that retirement that you set out to many, many years ago. And then the other side of it, if you're giving it to, or if you're giving to a non-family member and going that route, you have to understand, okay, maximizing that value for the sale and making sure that you trust those that are taking it over. And so deriving value out of your business, because it is likely your largest asset, is huge. And that's something that we spend a lot of time on. And I mentioned it earlier in this segment, is diversification as well. So your business is likely your largest asset. How can we diversify and make sure that you're saving in other retirement accounts, which Jim will talk about a little later in this session, but understanding where else can you save to make sure that you're not solely relying on your business for your retirement. And so again, driving the value is one of the biggest and most important tasks that we would walk through. And the reason being, and I'll get to it on the next slide, is that we would be building your personal balance sheet. And so here, that's where we would understand, okay, what investment accounts and retirement accounts do you have that would help to create a stream of income when you're no longer working? If you have a business, how much is that business worth? Will it provide you income? Will you get a lump sum after you leave? And so these are the types of conversations that we would have to make sure that we've got a full understanding of your assets. And then your debt. We need to know, are you going to have a mortgage in retirement, or is that going to be paid off? Are there any other outstanding debts, business debt, that we need to consider before you retire? And if you're going to carry it into retirement, is it going to be something that we need to closely monitor? And this all leads into what your net worth is. So assets minus debt. And that's going to give you the baseline and is really the core of your financial plan. And so let's take a look at the next slide, which will help us to understand that in order to fully execute your financial plan, and to directly link it back to the last slide, there may be pieces of your plan and of your assets that you need help to execute on your strategy. And so you may need to put together a team of strategic partners that would help you to fully carry out your financial plan. And so for some of you on this call, you may already work with some of these strategic partners, and you may not need to work with all of them. Maybe some of them, like for example, a CPA, your accountant, that's someone that you would work with to ensure your tax efficiency. And so we as the financial advisor would be the quarterback to this strategic partnership that we would create with these other outside professionals. And that would really help us to tie together your entire financial plan so that we make sure that you have all of the pieces in place so that you're living well at the end of your working years and that you're able to have that retirement that you envisioned several slides ago. So I know I've covered quite a bit over the last couple of slides, and I know I've covered from understanding what your goals are. So we envisioned what our retirement was. Then we were building a financial plan. We were understanding if we're a business owner, we've got an exit strategy that we need to really define and understand exactly what it is. We may need to enlist some key strategic partners to help carry out our plan and everything in between. So it may seem like a lot, and it is, but we as a financial advisor are the one to really help walk you through those steps and make it easy for you. And the reason we do that is because we understand the importance of your financial plan being the foundation of your financial success. And so we want to make sure that we've got that foundation really built well so that we can lead into the next step, which is invest well, tie a strategy back to your plan, and then ultimately live well. So I'm going to turn it over to Jim, and we'll take additional questions at the end. But Jim will talk about step 2 of our process and coming up with an investment strategy that ties directly to your goals. So Jim, go ahead and take it away.
Thanks, Lizel, and good job of talking through the plan well phase. For those of you who envisioned, as Lizel asked you to do, where you would be when you didn't work as much as you do right now, there were probably many of us who thought about a beach. Many of us thought about a lake, an RV. Many of us thought about playing more golf or spending more time with family or gardening more, reading more books. All those things just sound so great, especially during this pandemic. We'd love to do a lot of them. Someday that will end soon. And the key components of a plan success are all those that you see on this slide that Lizel just went through. And it starts with discovering your goals. And I would just say the audience here today is a mixture of business owners and non-business owners. And regardless of where you sit on that side of things, discovering your goals, understanding the assets and investments you have to give you income later to help you achieve that beach or lake or travel life, all start with building, as Lizel said, that foundational plan. And then the next component really is to consider how we might invest for you, right? And so part of any part of a financial plan includes an investment strategy. And when you think about investing well, we consider those components to be many of your income sources. The first one being, what are your Social Security benefits? You've paid into them. You've paid into them if you're a business owner for your employees. And do you have a pension income? Have you set up that defined benefit plan in your business, or have you worked for a company that had a defined benefit plan like a pension income? We also could look at your retirement accounts. Might be a 401k, it could be a 403b. maybe a 457 plan. But in those, we want to drill down into how you're invested, what type of risk you're taking, and eventually how they might grow over time based on your risk tolerance. And then we'll look at, okay, if you want to live in that plan as you sit here today at age 60, and we'll say, if you're going to live a good life, you're going to live to your mid 90s, which would be great. Maybe many of us will live longer with the advent of new medicines. But what is the drawdown strategy, and what is the tax efficiency? How do you get income out of this portfolio? If Social Security income gives you $30,000 a year, and you don't have a pension, and you want to live on $100,000 a year, do you have enough investments to create that and fill that gap between 30,000 and 100,000 a year? And so those are some key components of the invest well phase as they link to the plan. And a big part of it is this last concept of how will we invest? Philosophically, our belief is giving our clients risk-adjusted return above the benchmark. And we achieve that through solid diversification and asset allocations that mimic pockets of the market that give the greatest opportunity for success. And a part of that is managing risk, not only your emotional risk. And lastly, we really have been tested on this one over the past 3 or 4 months, or maybe since March, but having the discipline to stay in the markets. Again, really an important part of a relationship we have in our Invest Well component with our clients, and one we would implore you to think about. And if you go to the next slide, I think let's dig in a little bit deeper to retirement accounts. Because when you think about investment income and aligning your investments, again, let's go back to your ideal place to retire. Liesel's was playing a bit more golf. She wanted to travel, and she wanted to coach soccer. And in order for her to do that, she probably needs to save some money in a retirement account so she can have some retirement income, because golf's expensive and travel's expensive. And so in order to make that happen, we would like you to contribute to some type of retirement plan if you're our client. And you can look on the screen here and see there's likely 2 options you have on a macro basis. One of them is an IRA, and the other is you're either as an employer, you've built a 401k or some type of employer sponsored plan, or you're working for a company that gives that to you. And so there are pros and cons clearly of each of these. And with an IRA, almost anyone can open an IRA. There are different types, and there are some qualifications for those types. And you can see for small business owners, these may be suitable. And for individuals, they may be suitable. You can open a traditional IRA, which it offers a $6,000 annual cap with a catch-up provision of $1,000 additional if you're 50 or older. And the Roth is a similar concept, except that's done with post-tax dollars, and there are some income limitations on that one that you'll need to work through to see if that's a good one for you or not. And then there's a SEP IRA, which for many business owners, this is a really great tool. But again, there are pros and cons to each of these concepts. And the thought is, whether it's an IRA or an employer-sponsored plan, how can you maximize your income and your savings to give you the greatest amount of tax-efficient savings and put it in an investment that gives you the greatest return over time? That's the question that we'll answer in our Invest Well portion when we consider the type of plan you should be in. For the business owner side of things that are listening today, what are you providing your employees, if you have any, and how are you doing that, is an equally important question, because there are numerous selections. If you look at the right-hand side of the slide, from a safe harbor 401k to a traditional 401k to a simple IRA, each of those has certain components as we would help build them for you, one with limitations of how much you can put in. And again, if the idea is to maximize savings to increase the amount of investment income you can receive later in life, then we really need to put some time and think about this each year. And so, you can see how aligning your investments is a critical component to the overall financial plan for you. If you go to the next slide, please, you can think a bit about what I spoke of. One of our investment philosophies is about diversifying your portfolio and managing your risk. How many of you, as you envisioned your retirement, playing more golf or whatever you're doing, how many of you opened your portfolio in April and said, what the hell happened? Right? Oh my God, I can't play more golf. I just lost $50,000. Well, we probably all did that, so I'll raise my hand. But the point is, to a diversified portfolio and managing risk, is that these tools of asset allocation and risk management really are a solid discussion that should take place between you and your advisor. Some of you want to take all the risk in the world and some don't. And both of those are okay, as long as they create the amount of retirement income you want and need to play golf or sit on the beach or travel the world or ski or spend more time with family. And that's the important part of building and managing risk. Any advisor or even yourself or any retirement portfolio can offer stocks or bonds or mutual funds or cash or alternative, but not all of them can talk to you about risk. Not all of them can talk about how you feel about risk, and not all of them can help you diversify a portfolio. And that is the critical conversation that needs to happen so that you can best align your investments and your risk tolerance to your overall financial plan. And I think the last part, if you go to the next slide, that we spoke of relating to, please go to the next slide. Thank you. The last part, if you could go to the previous slide. Thank you. The last part to think about aligning your investments is about discipline. So again, right, we talked about diversification, risk management. These are all investment management tools that we have. The other part of an advisory relationship is about talking about discipline. We pride ourselves in trying to deliver long-term risk-adjusted return above the benchmark. To us, that means 5 and 10 years. It doesn't mean 5 and 10 months. And part of that is staying invested. We like to move our allocations to pockets of the market that provide opportunity, and we do that for our clients. But if you pull back into cash at a time in which the market declines, you're not disciplined. And what this slide shows you is that staying invested basically doesn't have you miss any of the top performing days that can hurt your return. And the bar charts on this slide show you from the far right, the smallest bar, all the way to the far left, the largest bar, that if you invested, $100,000 in stocks, and if you missed 25 days, that may have lost money. Where if you stayed in from January 1st, 2000 to December 31st, 2019, almost 20 years, and you stayed in the market and you stayed in your strategy, that $100,000 more than tripled. And that's a very meaningful piece of advice that we try to coach our clients to when we talk about aligning investments. That also helps consider the other factors like risk tolerance and asset allocation / the overall risk management that we're trying to achieve for clients. And so when you go to the next slide and you try to put these items that we talked about between Liesl and me together, the key takeaways that we'll get to in a minute will focus on, you have to have a really solid plan that considers all the things you want to achieve in simple terms, and all the things you have, and how do they work together to devise an investment strategy that ultimately helps you live well. And so when we talk about these components and you hear them in the public, this is what they mean. This is what we spend our time with, focusing on clients. And it's all about how we help you achieve your goals, and doing the things you'd like to do later in life are critical to your success. And those are the things that really make us happy, is when you achieve your goals. So if you go to the next slide, it just really focuses on what Liza and I talked about today. That if you have some takeaways from this, wherever you are, 40, 50, 30, 60, 70, whether you own a business, whether you don't, do you have a financial plan that includes the goals and the things you want to do? If you do, great. You should think about executing it. If you don't, you really should have one. And secondly, you really should think about taking the assets you have, retirement accounts, portfolios, bank accounts, whatever you have, and ensuring they're supporting that plan in the right investment strategy that both has diversification and the right asset allocation, and work with somebody who helps you be disciplined over time. Your job with the advisory team is to monitor and review it. And all of that leads to the third step, which is, helping you live well. And we really focus on that with our clients, whether that be Liza or me or Lawrence as the lead advisor with that client, or our surrounding team, our Heather O'Rourke, who's our financial planner and leads that portion of our business, or our operations folks in Kelly and Holly, or our relationship and marketing folks in Jarell and Heather. Or you might be talking to Becky when you call our office, and she'll guide you to the right people. All of that is about helping you gain value and realize your goals. And hopefully you've taken at least the first two components of this from today's call. So thanks. And Liza and I will now open the line for questions, or the chat room for questions if you have any.